Okay, welcome guys. And I hope you guys had a good week last week. Last week we didn't really do much because I can remember I stated that we are going to be observing gold because of the drop. We were anticipating a drop in gold last week, which actually did happen. So I'm just going to apologies. I have to quickly disable the waiting room. All right. So last week we spoke about gold. I mean, my prime focus last week was on gold. And we had a few discussion about it to observe what's going to happen in gold, and to observe when would be the best time to go into the asset itself. So, and I can remember, I think when we had our last webinar was on the 1st, right? So we had a webinar on the 1st. At that time, price was, according to the seasonality, we should be here. I'm just gonna mute your mic for a second, guys. So at that point, price is meant to be somewhere at that maximum point, which gold is meant to get to, on the 1st. And I remember I said that there's a drop coming. It's either gonna come between maybe the 1st or the 3rd. Between the 1st and the 3rd, we should have that drop. And then we can only go in only when price is, around the 5th right here. We should be looking for position. Nevertheless, we have to be very careful because of we didn't check what the COT is saying. Okay, so as predicted, the drop did happen, but it happened kind of a day later. It happened on the 6th. So one day off, literally, in which price came in, first did a fake out right here, did as if it was going to break through, but did a clear run and cut everybody out right around here, and then drop, which still shows exactly what was meant to happen, this type of move that we're expecting. So it did happen. So that's why I told you guys last week, you have to be very careful. You have to stay away from it. If you're not experienced, you shouldn't go into it because, until we see what the COT report is saying, we can't really make a decision. Now, looking at the COT report for this week, what we can see now, there's a slightly different dynamics. And keep in mind, I've always, I think since the last 3 weeks, I've always kept on the point that we're trying to focus on one asset that's going to do a long run or two assets that's going to do a long move and just capitalize on those. No need to, trade every little thing that comes around the way, because that's how you lose money. So, as I said last week, until we see the COT report for what's coming out, then we can make a decision on gold. And coming to look at, the COT report for gold right now, we can see there's a little bit of long position added to it, but there's more short position put into the game. Nevertheless, oh, wow. Guys, try to unmute your mic. If you want to unmute yourself, just please use the chat room instead, so we just don't have noise popping in. Yeah, so basically what we want to do is we want to capitalize on the up move, but we expect the move to start on the 5th, right? Now, from looking at the 5th, I remember telling you guys to look at the COT report on Tuesday to confirm what's going to happen. And this was the report that came out on the Tuesday, which is on the 3rd, if I'm not mistaken. On the 3rd, this report came out on the 3rd of this month, which shows there's more selling power rather than buying power in the game, which then validates the down move before it happens, So that report came out somewhere around the 3rd, which validated this down move happening, in which that's what we exactly saw. And I remember we spoke about it last week. Even some people came and gave an input last week expecting gold to get to somewhere around where it got to right now. I think they were talking about, which that's where gold got to. So kudos to the guys that spotted that saw it. It's beautiful. So now that down move has happened. Now we have to focus on, what we really want to do now in terms of are we meant to buy now, Now, quite frankly speaking, the the kind of move is not fully clear if we should buy yet. The main reason is on the 5th, right? We see that should be where the price gets to the maximum bottom part, but that happened a day later. It did it on the 6th instead. So it delayed for a day and did it on the 6th. Therefore, there's a lag in this data now that's coming through. So what we should do ideally now is to observe. One thing you know for sure is once price drops, there will definitely be a rebound. So you want to go in on that rebound. Is that rebounds area now that we're looking for? So to help us locate that, what I'm going to do a little bit is I'm going to go into probability for a second. I check into probability to see when will be the ideal date, which probability gives us to, go in for that buy, and then we can hold that buy all the way till September. So August the 8th. Yeah. Oh, yeah. I also remembered, right? I remembered saying this last week for the guys that were in the last week webinar because of the price. When we saw this and we saw the 5th to buy on the 5th, I said, look, I won't want to go in on the 5th, but maybe the 6th might be an ideal point to go in because it's 50-50. But to be on the safe side, we should wait till the Monday. And I think some people actually went on the 6th, on the, what's it called? On the 6th. I don't know where you went in from, or, I hope you didn't go in all the way from the top here, because if you did, you literally just killed your account. I mean, that's like 431 pips. I remember saying it because that 5th was 50-50, and I was like, a 5th might be a good time to go in, but if you're not, if you're new to the game, wait to the 7th, to the 9th right here. So from what I'm seeing right here, anyway, from the probability, it's giving us a buy. We got a buy throughout this entire week. And then the seasonality gives us that buy power. It's kind of weird because it's giving us that buy power around here. So we might end up seeing a little bit of consolidation, maybe a little bit of pullback, but we definitely will see a kickback to the top side. We'll definitely see a kickback to the top side. And keep in mind, when price was somewhere around here, I mentioned when price gets here will be the ideal point to get in anywhere. And I can't remember why I drew those lines here, but right here would be the ideal entry anyway. So around here. So now price is already around this region already. So personally for me, no matter how risky this is the most mature time for me to go into this asset. I won't lie to you. Now, keep in mind, as I said, if you're still new, this is going to be one of them ones that you might want to sit out. But if you don't want to sit it out, I have a way to help you, and I'll explain that in a moment. But you have to follow this rule strictly, because if not, there's a high probability you will lose your account, because this is gold we're dealing with right here. Now, we have the alignment with the probability for 5 days straight, so we have nothing to worry about on that section. With the COT report, we do not have the alignment. We have 4,000 new positions coming in, while 7,000 new positions being, put down to the short side, coming in for the short side. So, and when we look at the chart, take out the non-commercials and the non-reportable, we haven't seen any major buying power coming into play. I still expect this buying power that it's lagging. I expect that it's just lagging, that gold will pop to the upside, but fingers crossed anyway. So that means, let me make sure I know. Right. So basically that means this, we have the 4 strategy rule that we follow is this. So we have the seasonal, the COT, we have the probability, and then we have the William. So seasonality is not sure. It's kind of in between, right? So let me look at that. So seasonality right here is giving us, we have just 1 day, according to the 40 years, to go in for the buy. Then we'll most likely see consolidation, but it's not fully ripe to the 15th. But I have a feeling that this week coming, we might not need to wait to that 15th to go in. We can actually go in from tomorrow. So right now, this is what it looks like. So with seasonality is uncertain, this will go short. Probability, we go long. And with the Williams, we should actually do have a buy coming in. Now, I do the Williams slightly different. Because it's gold, we use gold as a correlating asset. So I'm going to switch it to USD JPY. The main reason is USD JPY kind of reflect gold. When gold goes down, USD JPY should come up. So in ideal scenario, the inverse. So what we can see anyway right here is that, we can see that buying power coming in. Just a little bit of buying power coming in. And if you look at, the William, when you saw the buying power, you had that little bump to the upside. When you saw the buying power, not too long, you actually have a bump. You saw the short come in, and then eventually the short actually happened. You saw the peak buy come in, the buy happened. So that's how the William works. It gives you kind of like a heads up, like most likely this is what's going to happen. So that being said, we have the William on the long. So basically, the strategy right now, we're dealing with a 50-50 because we have 2 pointing to the direction we want. We have 1 pointing down and 1 uncertain. So it's definitely 50-50. It's between 2. So now the risk of this trade is actually 50-50, which is a high risk trade, right? So this is how I grade it. So high risk trade. Now for the guys that already know how to trade, I mean, you guys will probably know when you want to grab your entry in this trade. I specifically, would not want to just jump into the trade without having an adequate proof that it's going to go in my direction. So from this, what I can see is the best date actually from Monday all the way to Friday is Thursday, right? But I have a better chance to go in on Tuesday. Okay, so what I can do is I can creep in on Monday, which gives me a good chance, but Thursday seems to be the best. But nevertheless, if you're new to the game, this is what I want you to do, right? First things first, you want to load up your EMA, the 200 EMA, 50, and the 20 EMA, right? Now, this is how the rule is going to go. Because the price has moved drastically down, right? I want you to pop into your 15-minute chart, right? And the only time, if you're new to this game, the only time you are allowed to buy this asset is when price has fully moved above your 200 EMA, right? So I need to write this down. Only time for an exit, entry for price. So literally, I'm teaching you how to trade on a high stakes, high risk trade. This is how you trade it. The only time is when price is above the 20, 50, 200 EMA. So if price does not get above here, it doesn't matter if the date is Monday, Tuesday, Wednesday, Thursday, or Friday. Do not trade this asset. Under no condition, do not trade it. Minimum time frame, 15 minutes. If you go into an hour, for example, you have to wait a very long time, and that move could have been gone further, very far from you. So with this one, move could be gone far from you, but at least what that would do is it will give you kind of more peace of mind that the EMAs would be like a hold up for the price. So price would trade above the moving averages, which will give you more security. Now, that's the only time you should trade. Once price goes, not when it goes above the 20, not when it goes above the 50, but when it goes above the 200. So price has to be above the 20, 50, and 200 at the same time. So it should look something like this. Price should be above all of them, before you even consider looking for a buy. If price is below, don't bother at all to go into the market. Just leave it be whichever day it is. The entry could be Monday, Tuesday, Wednesday, Thursday, Friday. It could be any of those dates. I don't know which specific date it is because right now we're flying blind. The seasonality is giving us until the 15th. I have a feeling price will move before the 15th. COT report isn't looking good, but the only thing that looks good is probability. And so far, price is still following the seasonality because the drop that the seasonality gave us that's going to happen actually did happen. It gave us that drop somewhere around here, and that drop literally happened drastically as predicted. So this buying power is most likely going to happen also drastically as predicted. And if we wait till the 15th, which is, if I'm not mistaken, next week, we could have missed a very massive chunk of it. You know, I don't want to start chasing it at that point. If you're very skeptical about it, wait till the 15th. If you're not skeptical and you're in for a little bit of risk tolerance and you can risk it, you know, we can look for an entry. But the only time to look for an entry is if price is above the 20, 50, and 200 EMA. That's one. So second thing is this, right? Now, once price get above that, I don't know how many of you have like what's it called? A support and resistance. A support and resistance indicator. If you have a support and resistance indicator, you load this up. So I'm just going to put this on right here, right? So that's my own support and resistance indicator. I seem to like the PZ a lot more than any other thing. So now, if you look at the 15 minutes, just if let's say we're using 15 minutes as the benchmark, right? Now, if price ends up getting above the EMA, do not just trade it and go in for a buy. No, that's not what you do. You wait, right? You want to wait for that. And what you want to wait for is you want to wait for price to leave the 200 EMA, then come back and retest on a support region. So let's say, for example, if price leaves the zone, this is quite a lot of things to learn, so you might have to maybe rewatch this video. Let's say price leaves the zone and price comes all the way back down and retest your EMA. Now, if your EMA is right here and you have a thick support line right there, wait for price to get to your support line before you then decide to go for the entry, right? So rule number 2, wait for price to get to support. Okay, that's the second rule, right? So wait for price to get to the support line before your entry, right? Now, the third rule is this. You need an entry indicators. So I have this indicator as my entry indicator, for example. I have the PZ day trading. That's my entry indicator, right? And it gives me exactly when I should go into the market, when I should exit the market, and all of that stuff. You can see the buy, the sell, the buy, the sell, the buy, the sell. Now, so far price is below the EMA, you know, and I take the sell entry, I should be okay. If price is above the EMA and I take the buy entry, I should be okay. I see it kind of works best for me, right? So the third rule is this. When price leaves the, what's it called? Breaks above the 200 EMA, comes back to retest your support region, and then leaves your support region, wait for the buy signal that you get from whatever entry indicator that you use, on whichever one you find to work best for you, right? When you see that buy signal, then go in. So the third thing to do is wait for buy signal from. So you want to wait for your buy signal from your indicator, right? Right. So, and then, so that's the third thing you want to do. Right? I don't think I've broken this down for a long time. So that's the third thing you want to do. You want to wait for that buy signal. Once you get that buy signal, only then you should go into that trade. Now, the fourth thing is your money management, right? That's where your stop loss is going to be and what you want to have as trailing stuff. Now, specifically, I will not trail this trade. I will not trail it. That's my own personal preferences because I can then, you know, I have more flexibility in when I want to come out of the trade or when I want to secure my position. But for you guys, for example, I would say you should have a way of setting your stop loss into break even once you're in profit enough, right? So you don't end up losing any money. So the fourth thing is SL, your stop loss. So your SL will be ATR times 1.5, right? So that's your stop loss. The ATR value times 1.5, right? So what you want to do is your ATR value will be whatever it is times 1.5, okay? In which is, if you look at it right here, I got ATR right here. Now, what ATR does is it calculates the last 14. I set my period to 14. It will calculate the last 14 candle on this specific time frame and gives me an average of price within that last 14 candle, right? In my scenario, it gives me 55 pips. In some cases, depending on which asset you're looking at, you might want to include the first number. In this one, it just gives me 55.7 pips, right? So which means that I have to times that by 1.5, which means 55 times literally half of 55, which should be about 27.5, right? So that would give me 55 plus 27.5, whichever figure, that should be 70, 80, 82.5, I think. Should be around roughly about 82.5. Correct me if I'm wrong. I think that should be about what we should have, about 82.5 pips. So my SL would equals 82.5 pips. Now, it doesn't mean the SL is static. It's not static because this number will change. Whenever price cross above and you get your entry, you want to check your ATR ratio and then times that number by 1.5. You know, that whatever figure that gives you, that's your stop loss. Now, because this trade is a long-term trade, it's not a short-term trade. 85 pips, risking 85 pips is baby change collected compared to what you're going to get back from this trade if everything goes good, right? 85 pips SL is perfect. Now, this is one thing. Rule number 5, you set your trailing stop or lock in profit. That's me. So rule number 5 is lock in profit, right? Your lock in profit is when you lock your asset into profit so you don't take a loss. You know, and that's kind of the same thing like your trailing stop does, but your trailing stop just keeps readjusting it over time. Now, what I would say is once price moves half of this number, so in my case now I have 82.5, right? Which is what I have from adding ATR times 1.5 on a 15 minutes time frame, right? So if I divide that by 2, that should give me about 41.25, right? 0.25 pips. So when price moves 41.25 pips in profit, I want to lock myself in at, this is what I'm going to do. I'm going to go to a lower time frame, like the 5-minute time frame in this scenario. That will give me an idea of when I want to lock myself in. I want to lock myself in for 9 pips. So I'm just going to take the first figure right here, 9, right? I'll lock myself in. So lock in profit. Nine pips. So once price has gone 41.25 in profit, so let's say 41 pips in profit, I want to lock in 9 pips. Once I've locked in 9 pips, that's it. Game over. I don't need to touch my trade anymore. Now I have peace of mind. Whatever happens in the price, if price goes up and comes back down, I still take that 9 pips off the market. You know, and if price ends up going further and further away, whatever pips it goes up with, I take that in profit. These are the 5 rules to follow if you are new. If you're new and you want to take a very, very super risky trade and you're not sure of what to do, this is what you do. For the guys that are most advanced, you probably have your own, You have your own style of trading. I mean, I do have a few set for my EA, for example. So my 2021 EA. Let me just load that up. It's very simple. My EA on 2021 follows that same simple rules, maybe even much simpler, which is when price is above this 3 EMA, that's only when you should take a buy entry. When price is below, you take a sell. So in this scenario, for example, price would have taken a buy entry for me right here because price was just slightly above right here and I got that buy signal. I'll have had that and my stop loss will have been somewhere below here. Now, keep in mind, this is a daily chart, so the stop loss ratio is going to be wide. But let's say, for example, if I was trading this, I put this on 15 minutes, I will have had entries from, let's say, I'll have had entries from here, entries from here, entries from here, 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 here. And that should ideally keep me in play. And this will even be better for you, for guys anyway. So let's say, for example, if you miss your entry and you have your entry indicator still giving you the signal, so far price hasn't gone too far. And how do you know if price has gone too far? From from where you should go in from. So if price goes above it, for example, and you're thinking price has gone a very long time, has gone up for a very long time, and you're anticipating a pullback, what you do is you go on your daily chart, you look for your ATR ratio. If your ATR ratio, for example, is what's it called, is exactly the same thing as the amount of price that price is moved, then you shouldn't take that trade. You understand? So if your ATR ratio is less than the amount of price, is less than what the price has done, then you should take that trade, you know, and that's basically what it is. So in this scenario, for example, let me give you an example. So in this, let's say 73 pips, for example, if price has gone beyond 73 pips on the buy level, you know, you don't want to take the trade. But if price is still falling below the 73 pips level, then it's still okay to at least consider to take a trade. Okay, so with these rules right now, does anyone have any questions? And I know some people would, you know, might disagree with me letting, trying to get people to risk certain value. But what I've noticed over time from what I've been doing is a lot of people, when they start trading, a lot of people feel left out when you tell them to stay away from the trades. Now, my own prerogative is basically I'm trying to get, if you're going to trade, I'm trying to get you to a stage that if you want to trade, you want to trade as safely as possible. You know, that's why I set these rules down. These has been working for me, and it works good because this is kind of like the same principle my EA runs off, except from it doesn't actually run on principle number 2. You know, it runs on principle number 1, runs on number 3, runs on number 4, and it runs on number 5, but it doesn't run on number 2. Number 2 is an extra layer of security for everybody. You know, wait for price to pull back to your support level before you go in. So far on this, does anyone have any questions? This is highly important because right now we do not have a set entry date for this gold asset. There isn't any set. Everything is upside down. This is normally a type of trade that I wouldn't even take. And a lot of people know me that I won't take it now, but because I personally feel like this might actually work out for us this year, it's a lot more riskier. I'm considering to take this trade, you know, and put it out there for people that wants to take it to check it. Of course, you have a free will to, you know, decide not to take it if you don't want to, you know, if you feel it's too risky. Do your own research, do your own, you know, conclusion before you take the trade. Don't say because I said it, you don't want to take it, you know. But for the people that are very new, you know, this is how I would approach it. And to be quite frank, it's not a trading signal. I'm not giving out any trading signal to anybody. I'm quite frankly saying, this is what I'm about to do, and this is how I'm about to approach it. So if you guys want to go for it, please feel free to go for it. You know, I'm not giving you a signal to go for it. But if you decide to go for it, this is what you're going to expect. Okay. I'm literally saying it's out there. This is just for educational purposes because I know some people say I've said something, now you're going to throw your entire account on it. I'm not going to be liable for any of those. Okay. Now, does anyone have any questions in regards to this? This is literally the rules set for taking any high-risk trade. Does anyone have any questions in regards to this? I'm guessing nobody has any questions. Everybody's good. Okay, in that respect, what I'll do now is I'm going to quickly run through maybe another asset that might be less riskier for people to take. I'm just going to do a quick run through, you know, just trying to see what I can find from the COT report. If I see something substantial, I will do a quick analysis on it just to give a little bit of variation to what we're about to trade this week. So USD looks okay, right? We have about 7 minutes left. I should be able to squeeze one analysis in there. Okay. So USD looks like a sell, and on the 8th. So it's 8, 9, 10, 11. So on the 11th, We have a down on the 11th. We have a, from the COT report, we have also the down about to play in. So what I'm going to do right now, even from looking at the USD being down on the 11th, I would actually want to trade gold on that same 11 to go up. So, but I don't think we have enough time for me to discuss that. So what I'm going to do is I'm just doing a quick analysis on USD since it looks it's going to go down on the 11th, just to give a little bit of variation into the trade. Okay, so started with USD CHF. So I've checked my seasonality, I've checked my COT report, and it looks good. So on the 11th, I want to look at that. So USD CHF, I'm looking for 3 days that's going to go down. So on the 11th, gave me 50-50, 12, it kind of gives me a down, but you know, doesn't really look good. Yeah, I mean, it's definitely going to consolidate, you know, between that 11, but at least could give me a at least a decent figure to go down with. I want to see something that gives me at least 3 days down, and then I should be fine. It's giving that same consolidation, which the seasonality is giving right here. So it doesn't really look that much. USD JPY. So let's check Euro USD. So we should be looking for a buy on the Euro USD. Okay, that also gives that kind of reflex. USD CAD. All right. No. GBP USD. Okay, so GBP USD gives that 3 straight days down, 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 down. Actually, wait, no, that's not correct because I'm actually looking for that to go buy because GBP comes first before USD. So I'm looking for a buy. So that doesn't really work. That doesn't cut it. GBP is meant to go up. So 11th. Okay, so we have 2 days AUD, AUD USD. AUD gives that 2 days, but the third day is not given. So I'm just gonna keep that on hold for a second. Okay, NZD gives that 3 days. Okay, someone has a question. Yeah, it looks weird this week, but this week that's coming, from what I'm seeing anyway, you know, it's most likely going to consolidate then go down. So if you can get it on the consolidation before the move happens, then that would be a good one. So NZD USD looks like the only one that's aligned with it currently. So I'm just going to quickly pop into the NZD USD to see if I can find something. Maybe we can find a place to, you know, yeah, bite down into. So I'm just going to go on daily. All right, so yeah, so that's been consolidating, which does look good. And on the 11th, so basically on the 11th, you want to trade NZD USD for a buy. So on 11th, NZD USD is a buy. So for those that you know don't want to risk it on gold, NZD USD on the 11th should be a buy. Now let me quickly go into one more thing. I just want to check the spread. This doesn't really look good. I'm expecting it to go up. So we still have a few days. So if we see a little bit of buying power going up before the 11th, then that should be fine. So guys, I'm just gonna mute all for a second. All right. So NZD USD. So that's a buy from the 11th. And what day we coming out of that trade? Let's see, exit Friday, right? Now, it should give at least a decent amount of, you know, to be quite frank, Friday is a too early exit, but that, you know, I want to exit on the 23rd, but let's just say we're scalping it for 3 days. So this same rules apply to this. You know, you want to wait for price to be above the EMAs. You want to wait for price to get to support line, wait for buy signal, SL times ATR, and then trailing stop lock. The same exact rule applies. So you want to wait. I guarantee you, if you follow this, you should make more sound decisions on trading. You should be in a better position. So far, you don't let your emotion play with you. So with this one, for example, come Wednesday, price is stuck between the 20, 50, and the 200. So come Wednesday, price is somewhere above here. For example, price comes for that retest and start leaving, and there's a support region. You can buy that and then exit on Friday. So there's literally 2 trades to go. This one is a medium risk because the only thing we don't have is the William. So it could have been a low risk. Maybe on Monday, Tuesday, if we see that buying power going up on the William, then it becomes a low risk. But with this one, we have a medium-sized risk. We buy on Monday, on the 11th, we exit by Friday. So that's, I think, should be Wednesday and then exit by Friday. So that's it. So we have this trade and then the gold trade as well, and then the gold trade. Okay. So guys, that's all we have for this week. I just want to make sure that you guys are safe. Hence why I'm literally banging on these points before, you go in. And gold done exactly what was expected, to fall. The data was 1 day lagged, but nevertheless, someone predicted that by the end of last week's webinar. Thank you for that person that, gold is probably going to fall down to this region. I think it was this region they pointed out to. I don't know, but I think it's around that region anyway. So now I
was the one that pointed it out.
Yeah, exactly. Thank you very much. So
the head and shoulder, the inverse head and shoulder. Yeah.
Yeah. So gold has done that now. So we should be looking for the gold to go back up now as a schedule. But high risk trade, this is what we look for. So, and then we have.
Sorry, Dan.
Yeah, we have like seconds left. Yeah.
Yes.
So because we know that USD is meant to fall on the 11th, right? So if USD is meant to fall on the 11th, and we see the data coming in for the COT report showing short as well. Most likely what we can expect is gold should most likely go long on the Wednesday.
Yes, that's correct.
So most likely gold will go long on that Wednesday. And if I check the probability for that Wednesday, I don't know what the probability is going to say for Wednesday, but it should give us a higher probability on Wednesday. Yeah, so it gives us a 64% on Wednesday, then 71% on Thursday. So ideally, that would be the ideal day to go in which if people are patient enough and wait for this, and ignore Monday, Tuesday, price should ideally just move all the way up. And then Wednesday, price should be above the 200 moving average, coming back for a retest and then shooting it back up. Wednesday should be the entry date, basically. Wednesday will be ideally the entry date for the gold trade. And then Wednesday to sell any USD assets that you have.
Yes, because I'd seen that the news last week pumped USD JPY. Euro USD started falling, USD JPY started going up. Anything against the USD was, was pushing.
Yeah,
the
news last week, the employment data was a bit positive.
Yeah.
Yes, it was. Yes, it was.
What James said is what I'm waiting for. I'm actually thinking it's going to fall by that Wednesday. So me, I'm waiting. I'm not doing anything Monday, Tuesday.
Yeah.
I'll just be looking at the charts. I've learned that and it's them that taught me. It's not every day you trade. You only trade if it's one day we trade. Yeah. Before I used to go every day. Now I don't waste my time again. Just one day a week.
Trading is not for every day, man. If you don't want to go crazy, you don't trade every day, bro. You do your best and leave the rest. That's what you do in trading. You come on 1 day, 2 days a week, you trade, you go away, take your profit, walk away. That's how you do it. Not every single day. You grow gray hair. Speaking from experience, you grow gray hair from trading every day. So that's the thing.
Man, thanks a lot. Thanks a lot for the information, man.
No problem, man. Anytime at all.
Yes.
Does anyone have any questions? To wrap this up right now. No? All right, guys. Thank you for joining, and then we'll wrap this up and we'll catch up in the chat room or next week. Okay? Take care of yourself, guys. God bless you all.
Okay, Dan. Yeah, you too. God bless you too. Bye. Yeah.